Good morning and welcome everybody, dear traders. We would like to screen the markets and showing us some interesting trading setups today in our live trading webinars. We call it real-time daily trading ideas, 5 days, 5 traders. But first of all, our disclaimer. Be aware that Forex and CFDs are leveraged products and can result in losses that exceed your deposit. They may not be subtitled for everyone, so please be aware that all we are showing and presenting here today is just in personal opinion and not an advice for investing. As I said to the beginning, 5 days, 5 traders. Today is Friday. Today with Dirk and his trading ideas. So later more about Dirk. Yeah, here are some good news. Christmas is coming early with Admiral Markets. We have some special promotion. So if you like to go with us on our Christmas specials here, check out our website for more details. Here we have some special offering of our products. For example, maybe here our DAX30 with a typical spread of only 0.8 points during the main trading hours. If you have some additional question, feel free to contact us. Here you can see our telephone number and our email address. And all our webinars are also recorded, so they are later on our YouTube channel. So feel free to check out. And so here's a picture from Dirk. So I say hello to you, Dirk. Hope the sound is well and you can hear me.
Yeah, just good morning. When I look at my picture, I guess it's not the same way I look today because I'm damn tired. Okay. Thank God it's Friday. TGIF, as I always call it. All right. Let's have a look at the German DAX for us for the first time. We got this hovering around between the 13,200 and the 13,220s. This is the so-called blue box, as we see right here, between the 50% moving, the 15% Fibonacci and the 61.8% Fibonacci, which is between the 13,170s and the 13,260s. So that might be something like a short zone where you possibly could enter short between these two Fibonacci's here. Of course, the risk reward might be a little bit more higher when we go around. We go short between the 13,260s and a little bit a rush over this Fib level. For example, what is going on in the last days? Let's just have a look at the blue boxes. We already placed these blue boxes in the last webinar, the so-called sell and buy zones. So something like this is buy zone. Always talked about this 12,840s, 12,860s, where we are possibly going back up, and that's the reason we always saw that one here. The 12,840s and 12,860s have been bought a couple of times right now, as you can see with the candles down here, 1, 2, 3, 4, 5ers. And back up to the 13,100 level. If you have a look at the calendar, have a look at the 15th of December. Next week, there's not only 3 important central banks like the Fed or the ECB or the Bank of England. You have to have watched at the 15th of December, where the so-called quadruple day at the Eurex is going on. So this is an important day for the German DAX as well, just because of futures warrants, stuff like that, running out, expiring. So the expiring date of the 15th of December is quite important for the German DAX. You probably have seen the lows, so it might be interesting to really check out if the DAX is strong enough to get up to the old record highs. If we have a look at the current political situation, besides all the technical stuff, you got to watch what is going on in Berlin. And yesterday, the Social Democrats gave way for coalition talks. This might not be the case that it's really ending up in a great coalition between Reds and Blacks, but in the end, it's a little bit of a positive sign. There's something like a moving sign. It may end with all this trouble. It may end in a new coalition and may end in a new government. because right now we don't have a 100% stable government. It's only a pending government. All right. The following market is gold. This morning I placed a couple of Fibonacci research tabs and for example a couple of ideas into this gold trade. The thing is, if you have a look at the weekly or the longer term chart, you may have to watch the very low from, let's see where it is, from the December 2016 even to the record high, to the high of 2017. That one is from the 8th of September, and you got to see that one at 1,357.50. The December 2016 low was around 1,122.68. So these are the two dots you're placing, and just have a look at the important Fibonacci retracements. For example, 61.8 is around the 12.11, and if you go up to the 50%, you are just around that approximately current level where gold is hovering around. Okay, so that might be an interesting level to simply have a bet on a re-long. So that might be interesting to get long around these levels. If we just delete this Fibonacci to right now and go back to the daily chart, and just to explain where this Fibonacci retracements are coming from, we are taking this 1260.62 low from the 6th of October as a 100 baseline, and going up to this current high from the 16th October around 1,306.02. So this is the zero baseline, and this Fibonacci retracement analysis gives you a hint where the projections are going. Projections are going 130.8 and 138.2 and 161.8. So these two levels, which are already marked with a black horizontal line here. Let's move that one back. That's from the old Fibonacci, the bigger one, longer term one. You got the 138.2 around the level of 1243. So this is not very far away from the long-term Fibonacci I already showed you at 1240. So the trade, for example, the buy limit, it's just a mini right here. Yeah, it depends on the size of your account, of course, and it makes sense to calculate if the position size is well and is really comfortable for you, or if it is way too high. So be aware that you have to calculate. We don't know your account size. So if you have something like this, you can take the right mouse click, of course, modify or just open it up and just check the levels. The price level, for example, is 1236.49.8. That's the buy limit. A stop loss is 1222.75, and the take profit is 1259.70. So what I'm going to tell you with that one is simply, just by showing you that one here, is that the risk is 100 euros. And the possible profit is around 200 euros, so that makes it a 2-to-1. Okay, so that's something you always have to be aware of, that you don't have trade setups which really are 1-to-1 or even less. You don't have to put much more risk than your possible profit is. Very important. Okay, what is going on with gold, and what is going on the next couple of hours, and what is very important today is that we have the NFP data. So the NFP data, what does it mean? The non-farm payrolls data is the US report, which is about the current unemployment rate, the current new non-farm payrolls, and for example, the average hourly rates and the weekly rates, and of course something like wage inflation, which is very important, not only for gold but for euro, US dollar, and the next Fed session at 13th of December to come. So this is something which is besides all the technical stuff, which is very important. Go and check the fundamentals. Go and check what is going on right now. Go and check what is going on with the current political situation, like for example the current debt ceiling deal, or for example check out what is going on with the 13th of December Fed rate decision. Is there something like a yield curve flattening? Is there something like the moving of all those Fed dots? And if you don't know about Fed dots, just check it. The Federal Reserve consists of a lot of guys sitting in the committee, and every single guy is giving his own projection, interest rate projection. And if you later on check something like a PDF or a PDF file from the Federal Reserve, which is open, is an open file, you can download it, or you can check it. And you see the so-called Fed dots, where all those Fed committee members are seeing the current, the next quarters, and the next years of a yield. Something like a yield curve is you can draw even a yield curve by taking the dots. So they might be flattening it more, or they might be hiking it more. So this is something like we don't know yet. But from the fundamentals and from the interest from the CPI, so from the CPI data, there is not much room to hike it more than one or twice next year. So that is the current analysis. Okay, and this has something to do with gold, and on top with things like gold. Check the euro-US dollar versus the gold. You see the current lows here, and if you check the euro-US dollar and the daily chart, you see euro-US dollar is going down. So the more euro-US dollar is going down, the more gold is going down, because it means that the greenback, the dollar, is going to be stronger. So this is something like commodity rules. It's correlations, so that the more the dollar is getting stronger, and the less worth are, for example, commodities, even like precious metals. Okay. Going from gold and from this kind of setup, we go to a euro-US dollar setup. This morning, I got stopped out, for example, at one reverse long trade. It was at 117.34. I got stopped out. Okay, that is something like happens every day. Not every single trade is a winner. You all know that. If we check this current, just delete this indicator, to check this current situation in the euro-US dollar, you gotta check the retracements from the low to the last high, and you'll probably see the low from the 115.54 to the 119.61. So that gives you a hint where the possible next entry might be more positive for you. It's around the 117.10. So that's the 61.8 level. That means for guys being short right now, that might be something like a target to the downside for them, and to probably take the shorts, to cover the shorts. And for people who like to think about restarting a long scenario, that might be something like the 61.8 level, where you can possibly reverse that one and enter a long position. So it might be quite nice to just color that one like a so-called long box, or however you will name it. So when we see that one here, there's the 117.12.8. That's the last low. Might be something like a little trigger for the next move up, back up again. Important, around 14.30 CET right today. The NFP data will be very important to observe. So that is the point. That is the point, which is some kind of guiding or driving your next trade setups into the afternoon. So I spoke a lot of minutes right now. Are special markets, special questions?
At the moment, not really, Dirk. So if you like, you can screen some additional markets, maybe like WTI or something equal.
Okay. First of all, I just wanted to check this US dollar versus the yen, because we have a look at the 2 days NFP data, and then the yen is another important currency. So there might be a lot of more drive in it. So check this, the current levels, for example, from the last high to the low, and you just see that we broke the 61.8 level to the upside. Just checking this one with a horizontal line, and go back to let's just stay with that one, and go back to even a monthly chart, just to check the longer term Fibonacci's, what is going on with those ones. So just to mark them, and just to maybe just check another color. Just hold on a second, moving that one into the red color, and just to widen it a little bit. Okay, so you got one Fibonacci, as you can see, at the 113.25, and this is the 50% Fibonacci, where we already had something like a support. The support began slightly sub 112. So if you check this monthly candle, you see this monthly candle is at 111.40, and right now it looks quite stable. So go back to the daily, and just going a little bit more room to the downside now, and for example, go up to projection levels, and the projection levels, for example, show you where the US dollar versus the yen might be heading to in the next couple of days and months to come. So that might be something like the 115, back to 115 level. So this is the old high. Here you go, 114.72. And to older highs, back up to the 117, the 118. This is only one reason. If all the stuff like, for example, US tax reforms and debt ceiling debt ceiling deals are about to work. Right now, the debt ceiling deal in the US has worked for a couple of weeks. The next debt ceiling date is 22nd of December. So there is no big solution for that one. They only moved the date, and they moved this is something like a bridge financing. It's crazy. It's not. There's no solution. Nothing like that. They're still hovering something like an event like a government shutdown. So there's no solution yet. If this occurs, if this happens, then US dollar yen is breaking down to 110, 108, 109, 110, because the whole move of international money flows will go back to Japan, where it obviously came from, because of the very low interest rates, because the yen is a financing currency, like the euro, for example. Okay. You spoke about WTI, for example, as well as Brent. Let's check Brent, for example. Brent, I already talked about Brent this morning. We got a couple of events in Brent as well. If you look back at the last week, what happened was this OPEC non-OPEC member deal. Really, it didn't happen really much, because a lot of this deal was probably priced in, and the ridiculous thing is that the US pumps up the whole stuff, and it's something like a really ridiculous deal, because everything the other OPEC and non-OPEC members are about to reduce in production, the US is going to pump it up, and to even send crude to Europe and even to other regions of the world. So this is in the end this kind of OPEC deal won't end up very well. For example, if you have a look at the international crude moves, the tanker moves and stuff like that, you got to see that a couple of it's called a 600 to 620 or 640,000 barrels a day are moved to Europe. So this goes versus France, versus Rotterdam in the Netherlands. You can check all this daily data later on in a monthly report, in a monthly crude oil report. So you see this OPEC deal in the end does not work well. So what does it mean from the technical aspects? It means that this blue zone you're about to see here is a 63 to 63.70. Might be something like a little short setup, a short zone. So if this Brent crude is moving up into that window, it might be nice to have a first setup to the short side. That's the idea behind it. If you, for example, got to look what's happening right now to the minute, of course, it would be a nice idea to give it a chance to move up to into the sell zone. So it might be a really short setup for a long entry here around the 63.10. Maybe possible nice if you look to the 1 hour candle. Just to give it a little bit more chance to go back to this 38.2 around the 62.90 level to relong. But in the end, it might be really nicer or smarter to wait until it moves up in the short zone and just short it. Okay, couple of questions, or I look at the, what is it, 11:22 right now? Okay.
Yeah, I think we are good in time. So normally, 15 to 20 minutes here. So we are scaled a bit over. So I think for the moment it's fine. So yeah, and dear listeners, if you'd like to have more information about live trading and you are also able to understand German, so you are also invited to our special webinar today at 2 p.m. We have a special webinar to the NFP news. So if you want to see some news trading, so check out our website for the links and you are invited. So yeah, thanks for the moment, Dirk, for your screening the market and showing us some interesting trading ideas. Thanks to also dear listeners. And yeah, I wish you a good day. See you maybe later in our news trading webinar. So yes, that's for the moment from me, from Berlin. So maybe some last words from you, Dirk.
Yeah, thanks a lot. Thanks for having me on, of course. And one thing I deeply forgot is this kind of Brexit story today, or a Brexit story from yesterday, because it looks like they're about to proceed to the next phase of a next deal. So the next phase of Brexit talks possibly are done, and so we heard a lot about these promises on the Irish border, and then they did some deals with this DUP allies in Belfast. So just to keep them happy, maybe. But the important thing is that they are maybe just going the next step into the next trade talks with the European Union. So this probably is a reason if you have a look at the current market overview at the pound. You see the euro pound is around 87 or 87.11, and GBP US dollar, so the so-called cable, is around 134.70s. So it might be a nice idea just to have a look at the 87.30s to 87 level in euro GBP, which is something like a make or break scenario for the weeks to come. If there is no deal, if there is something serious coming up again, so the pound will suffer, and it will be the same thing, the same story again, back up the road to 088, 090s. Okay, that's it from me. Thanks a lot, and see you next Friday, 11 CET. Be aware that we have the Eurex expiry date at the 15th of December, as I said before, and just maybe try to remind yourself that we have three central banks next week to come with interest rate decisions. So Federal Reserve is the most important one, but ECB and Bank of England as well. Thanks a lot. Bye bye.